Should you be concerned by the jobs report? The July jobs report showed non-farm payrolls grew by 73,000, which missed the estimate of 100,000. And unfortunately, the news got even worse as you dug into the report. The prior 2 months saw major negative revisions as June was revised from 147,000 to just 14,000. And May was revised from 125,000 to just 19,000. This amounted to a total negative revision of 258,000 when looking at the 2 months combined. Another negative was job growth in the month of July was heavily reliant on healthcare and social assistance as the category added 73,300 jobs in the month. This means that this category essentially carried the report as the total jobs created in the month topped the full headline number. There were some other areas that did see growth, with retail trade adding 15,700 jobs, leisure and hospitality added 5,000 jobs, and construction added 2,000 jobs. Unfortunately, there were more categories than normal that saw declines, with information falling by 2,000 jobs, government was down 10,000 jobs, manufacturing declined by 11,000 jobs. This one worried me the most. Professional and business services declined by 14,000 jobs. While all this sounds negative, I gotta say I still wouldn't panic over this report. The main reason is the unemployment rate remains historically low at 4.2%, and layoffs have not materially increased. I would even make the claim that the unemployment rate is healthier than it appears. Of those that are unemployed, the average weeks unemployed now stands at 24.1. And those that have been unemployed for more than 27 weeks jumped to 1.82 million people, which is about 1/4 of all the unemployed. If you've been out of work for more than 27 weeks, how hard have you really been looking? Or are some of those really just retired now? It seems we are in an environment where companies are keeping their employees and limiting new hires. With more clarity on the trade deals and tariffs now, that could help stabilize the labor market. But my main concern is, are there enough qualified candidates to truly fuel job growth? A large problem we have discussed in the past is an aging population that has seen assets climb tremendously, which has enabled many near retirement age the luxury to retire. While I don't want to say this is a negative, the working age population, or those between 25 and 54, remained near historical highs, around 83%. One positive in the report I didn't discuss yet was the fact that wage inflation came in above expectations at 3.9%, which is nice considering the decline in inflation we have seen this year. While again, I may sound negative on this report, I want to be clear that there is no reason to be overly concerned yet. I would be interested to see how the next few reports look before being worried about a potential recession in the near term. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.